Okay, let's go ahead and get into the stock market technical analysis. We now have CPI out of the way. We're starting to see the market's reaction to that. We'll need to see how we trade out the day. But what I'm going to do is get into the broad markets. We'll look at some individual trade ideas, and then we'll wrap up. Okay, treasury yield. That's really where I want to start off, the 10-year treasury yield. We're seeing a breakdown this morning of the upward trend line. You can see here, this is the trend line that we've been marching up really for a couple months now. And there's support, and you can see we kind of held it here. And then this morning, well, really yesterday, it kind of broke. But, to see a breakdown right before a big inflation kind of heading like CPI, little suspect. But then again, today, clear breakdown in that trend line, hitting the 200-day moving average on the rates. But in general, this trend has been broken now. So we'll want to see how we close the day. Most likely, if you close the day and they ramp this back up and yields close back within the trend line, that's pretty bearish for the markets. I don't think that'll happen. I think that would be, there's not a high probability. I mean, this does look like a breakdown in yields. So we'll just continue to watch that. But in general, interest rates, the uptrend line in interest rates has now broken. In general, that should be bullish for the markets to see rates coming down a little bit on the 10-year. And that's really what we have. So let's flip over to the markets and see what we got going on here. We'll start off with triple Qs. Okay, so in the private member group yesterday, I posted, and I've been posting in there a little bit this week, but in general, it's been, last week was a pretty slow week, but I posted, I thought it looked like we were heading to the top of the range. I mean, it was pretty obvious. There wasn't too much more to go to get to the top of the range. And we're there now. So this is the big sideways range that we've been trading in. We broke down, they recovered the range. And when you have a breakdown and you recover a range, typically you're going to head to the top of the range. And that is what we did. So now that we're at the top of the range, where do we go next? That's really the next thing. I would put decent odds that we are going to make a new high, all right? Pop up and make a new high. I put good odds because just like when we broke down to the bottom of the range, now that you're at the top, I think you can run it the other way and pop up and make some new highs on the market. So I put good odds. Again, I talked about in the private member group. Again, anybody that knows, I was only a 50% short position. I think I started taking it right about here. And I covered some of that short position yesterday ahead of the CPI because it lightened it up. And so I really have a pretty negligible short position right now. I'm not long, but do have a very small short position. So it's not really going to damage me. We will have negative divergence if we continue to pop up and make a new high. It'll just look like this. Basically, we're going to pop up and make a new high, and we will continue to show the momentum dropping. Now, what you'd want to see is the PPO and the RSI turn down. All right, as price makes a new high, then you'd want to see these start to turn down to keep those divergences intact. Okay, which would mean that we'd make a new divergent high, and then very likely we will be selling off after that. If we can just continue to ramp higher and just continue to go higher and take out these divergences, making a new high in momentum, then that would be extremely bullish, all right, to see the divergences get taken out and to see the price make a new high and divergences no longer remain. That would be very bullish. And at that point, we're probably going to have to look to start to buying dips. But as of right now, we have the divergences. They are still there. So I'd put good odds that even though I think we can run up and maybe make a couple days worth of new highs, as long as the divergences remain, I put good odds that they'll also get sold into and we'll then see the next move down. So that is what I have on triple Qs. And then if I go to like the components of triple Qs, here's Amazon, all right? I did put out a day trade. Well, not really a day trade. It's kind of a swing trade, I guess. But in the private member group, on this wedge right here, this bearish rising wedge, we had negative divergence showing up. It was really showing up right about there. And I said pretty good odds we're going to head down to 179.68, and you can see we broke trend. I pointed that out directly to the private member group saying this looks like a good trade, a good actionable trade, and we should head down, and we're still heading down. So even though I'm sure the market commentary and CNBC and all that's pumping the market, saying inflation's gone forever, guys, the reality is inflation dropped a little more than expected, but it's still rising. All right, we don't have deflation. We have mildly disinflation. We have slower. Inflation is still rising. It's still running between 3 to 4%, well above the Fed's 2% target. It's just not rising by 0.1% higher than what they thought. All right. So in general, inflation's still a problem. We don't have disinflation. We don't have deflation. So we have, you can see this one, Amazon, boom, down 2%. And it looks like it's, again, still heading down to our target. And the target's right there. All right. It's just down there at 180, 179.85. It'll be about a 5% drop from where the trade was called out. So that one still looks good. We're still seeing that drop. Meta, this one, the big pattern for me on this one is this island cluster top. All right. As long as this island cluster top remains, you see we gapped up. I've got it all marked up, but we gapped up, created a big island, gapped down. Okay, so we have an island cluster top in place. As long as that remains, then I'm treating the highs here as the top in this stock. It's about 532-ish, 531.96. Now this, when you get these island cluster tops, and I talked about it, they can often run it back into there, kind of making it look like they're going to recover and make the island cluster top invalid. But in general, usually you're going to see sellers step in when you hit about the midway point of the island. All right. So, we can go a little higher, but I would be looking for sellers to start to step in on this one soon. Now, if it continues to run up and you run up to the highs, a daily close above those highs up here is no go. All right. That would invalidate the island cluster top, meaning that is not the top, or very most likely not the top. So in that case, you'd want to, if you're short, you'd want to stop out on any kind of substantial daily close above that high. But in general, the trade's very simple. You stop out up here. Otherwise, look for more downside. Now, I'm not short this one. I'm kind of waiting for, it does have what looks to be a potential bear flag going on. You've got, if I clean this up, you've got this gap down, which would be your leg down. Then you kind of moving up on lower volume. See the volume? It's less volume. All right. So that's a very textbook flag pattern. And then you'd look for an impulsive move. Once you break the flag, then you look for an impulsive move to the, you just take the initial move down and take that at the point of the breakdown, and that gives you the major target, which again is about the 200-day moving average. It's about that 385.50. There's good support down there. It's a gap fill, 200-day moving average in general, and the major target. So I think this one is still in play, but in order for me to get short again, because again, if you guys remember, when this gap down, we filled this gap in the pre-market, or the after hours, I guess. I closed out my short trade, and then I'm looking to reshort it. I want to reshort it on a break of this trend line right here. All right, you break that, and we'll reshort this thing down to that measured target. So there's the trade. That's a trade setup. Not actionable quite yet, but it does look promising. Microsoft, I don't see anything super bearish in Microsoft. There is negative divergence, but again, this thing, if I had to guess, it looks like it wants to run up and make a new divergent high popping up here. All right, and putting in a new high likely will remain as a divergent high, which would get sold into, or very likely get sold into. But as of right now, from where it's at, I don't know. I think it could go up some more. And so that could keep the market kind of held up. You can see triple Q's kind of, and moving a little higher if Microsoft's going to continue to move higher. Google is kind of chopping around this trend line. So Google, you've got this resistance line right here. They popped it on earnings, and we're just kind of chopping around it. So we'll see. You know, I don't expect it to really break away from this trend line too much. I think we can, you know, I think it's going to continue to chop around, but ultimately looks like it'll get sold into. But, you know, again, I don't see anything that tells me to short this thing right here. So, and actually, you know, I mean, momentum, yeah, you don't really have negative divergence on the PPO there. So, yeah, in general, it's okay. It's not anything I'd want to be long, but I don't want to short it. So we're going to just watch that one. And NVIDIA's got earnings coming up. This thing's probably going to continue to trade sideways to up, leading into those earnings. And then we'll see. So for me, it's kind of a no touch until we get through earnings and see what happens after earnings. All right, so that's that one. And then Apple, yeah, Apple continues to look bullish. Apple was probably the most bullish chart. You have bullish divergence. All right, you were making divergent lows. That's a divergent low. All right, boom, gap up, moving higher. So Apple can go higher. All right, and I don't see any reason why Apple can't go higher. With Microsoft and Apple moving up, and you know, NVIDIA moving up, like the triple Qs is going to move up slightly. So Apple looks like it's probably going to head up to these highs up here, which is, yeah, I mean, that's another 4% or so upward move on Apple. You'll probably pop the highs and then put in a divergent high. I think you'll probably hit that, get rejected, ultimately pop it, put in negative divergence, and then we reject. But for now, Apple looks like it can move higher. Gold. Okay, so if interest rates are moving lower, at least as of today, then gold can move higher, and it very likely should. What I see on gold, this is gold, but I want to point something out. All right, this is the gold futures. We have a trend line to watch, and it continues to hold that trend line support. I think what's happened, you can see though the momentum starting to drop off on this one. I think we're going to run up, put in a divergent high. It will be negative divergence, and then we're going to break down. All right, so that's what it looks like on gold. And then when I go to the miners, they usually front run the metal, and the GDX already has that pattern. You can see here, look at, there's negative divergence on the momentum. You're putting in new highs, higher highs than before. That's a divergent high. And so I would be looking more for a short setup on this one. There's a potential trend line to watch. If I go down to the hourly, you might be able to mark something like that out. All right, and look for a break of that in order to initiate a sell signal. So no sell signal as of now, but we do have that negative divergence on the daily chart. And it's not there in gold yet, so this can continue to go up. But I think that the divergence here, I think we're going to build this divergence for a little while. I think gold futures will put in that divergence, and then we're going to break down. And looking across all my miners, they're not really behaving very like you'd expect today. All right, I think a lot of the miners had run up into the CPI reading, and it's kind of a sell the news event now because I'm not seeing the miners really taking off today, like you'd expect. So I think the upward move in these has already played out. All right, and we're now looking for the next move. Oil's just sitting right at support. Here's the oil futures. You can see here, boom, support. There's another tag and a little undercut today, but still holding that oil, holding that like a champ. So this looks like a buy to me, like a long oil. You can trade that with USO. That's one way to do it, or buy the futures directly. Another way to play it would be like oil servicers. Here's DVN. This is one that we caught. We caught this long move here. Got out of that. It's pulled back. The 200 days right down here could run down and hit that 200 day. Okay, I could see maybe a little more downside in this one, but maybe not. You know, it's hard to say. So it does look like it makes sense to start scaling into these from a long side. The downside, again, you know, down to the 200 day, maybe 3.5% to the downside. But again, it looks like it's time to start scaling back into these. Okay, now I'm just going to go through a bunch of trade ideas, basically. Eli Lilly still holding that support, holding it like a champ. You can see here on the daily chart, got it, held it there. There's support. There's another reaction. Holding that support, negative divergence remains. So again, we can continue to make a new high. There's a big sideways trading range. So if they want to, they could pop this thing aggressively, put in a kind of a blow off top, and keep that divergence and then reject. In general, it's holding support. There's no reason to be short this thing. There's no sell signal. The only trade to really make on this one would be buy support until the trend line breaks. All right, and there's the trend line. So could be rocketing up. The trend line's right there. When you get a break of that trend line, that would be the sell signal. Abercrombie, I haven't talked about this one for a while. We have a potential trend line here. It's only potential because I only have 2 data points, and we're there now. So I'm looking for a reaction here to help validate that trend line. But again, when I only have 2 data points, I can't call that a clean trend line. So if we hold here and maybe get a rejection, that will validate that trend line. And then ultimately we should head lower. On this one, you have pretty clear negative divergence. I think, right here, I think they're going to pop it up maybe intraday and make a slightly new high. That would make a lot of sense. Just run it up, make a new high, hold the divergence intact, and then reject and sell down. Okay, so that's the way I'm leaning. SMCI, this one is trading into the downtrend line. So you can see here, resistance, there's another reaction, and we're almost there, probably a little more upside. I think you're going to hit it, obviously. And then that would be an objective area to short this thing as it runs into resistance, all right? Again, it's pretty simple. You short at resistance. If it breaks above resistance and can hold above resistance, cover your short, take a small loss, move on to the next trade. Otherwise, it's objective to short at resistance for the next push down. And I really think the next push down is going to start to hit the 200, probably get a bounce there, and head down to our final target at right in here, about 356.50. Schwab, this one, again, this wedge, I've talked about it. The top of this wedge is not well defined. They keep kind of popping it above. The bigger trend line to watch is the support. All right, support is very well defined. All right, there's support. There's another reaction. There's another one. There's another one. Multiple reactions on that support line. So the sell signal on this will still continue to come on a break of support. And I think it's coming soon, but we don't have it yet because you have clear negative divergence. Momentum's just been dropping. They keep kind of grinding this thing higher. Every time it makes a new high, they sell into it, but then it hits that support line and it holds. So we're going to continue to watch it. Qualcomm, talked about this one. Now this one, you've got this support line here, all right, several reactions. Then it was rejected as resistance. They're popping it above today. We'll see how we close the day. Sometimes when you get reactions, especially on like a CPI reading, they might close it up here for a day or two. I don't think it's going to run away. I think this is about where it's going to head to. And maybe they'll close it up here for a day or two, run a bunch of stops out, and then I would look for it to reject. If we don't get that, and if they can kind of hold it up here and continue to build on the gains, that's no good for any kind of short position. It would make sense to start to stop out. But in general, I'm going to give it a little room. I think it can probably, I think this is, to me, looks like a stop raid. So again, yesterday, it was objective to short, just being right there at resistance. But usually when you get to key levels, you got to give it a little room. They're going to run some stops. The algos know those key levels, so they'll pop it up into levels, make everyone think that it's going to run away, run shorts out of the trade, and then take those positions and then reverse that thing. So that's what I'm looking for on that one. Again, if it doesn't happen, it would make sense to cover and move on. GM, this one, again, still holding that resistance. It's about 45, 43. We hit it on this gap up on the earnings, and it's, this gone nowhere. So it's just hanging in there. Divergence continues to show up. Now, again, I think they can pop this. They might pop it up and make a new divergent high. All right, whenever we've just been hanging at this level, it would make sense that they're going to at least pop it, run some stops, keep the divergence, and then reject this thing. But it doesn't have to, all right? Just because you have that as a potential doesn't mean that's just one option. It could just reject right here. You know, it could just hold this resistance, and then we could get like a gap down and create an island cluster top. All right, that's another option. So in general, still looks constructive for a short trade. JP Morgan looks like an objective short right at current levels. Let me kind of show you what I've got on my chart. On this one, you'll see this blue line, this upward trend line. We've had a lot of reactions on this trend line going all the way back to October of 2022. All right, you can see, look, there's reactions through there. There's a bunch through there. It then broke that trend line, and every time it hit it from underneath, we got reactions, rejection. All right, rejection. Then it did recover it, but when it did, look, they held that trend line. Then right here, hit the trend line, gap down. All right, another reaction on the trend line, and finally we're at it now. So we are, we've had a lot of reactions on the trend line. I would expect there to be another reaction here. Equally, you'll see this is a new high, just a slightly new higher high in price, and it's a divergent high right there, making negative divergence. You can see if I zoom in on the RSI, it's starting to turn down as of right now. So starting to help confirm that divergence. You'll want to see the PPO kind of cross down as well, but it's objective to short here at resistance. Doesn't mean it's going to, we could recover and continue to move higher. That's completely possible. I just pointed out a lot of reactions that have taken place. This thing looks like it flagged like a bull flag basically, and got close to the measured target. Could go a little higher, but so yeah, that's what I have on JP Morgan. Home builders, PHM, again, interest rates are falling, and home builders are definitely up today. I mean, they look decent, but there's no technical change in at least this stock. You can see here we have a bearish rising wedge. The measured target of this wedge, you take the widest part of the wedge, and that sets us up for a push all the way down to about the 200-day moving average. And we haven't hit that measured target. Now, you did break the wedge, and you break the wedge, run down. All right, they held this, kind of recovered right there. It doesn't look like there's really a support level, and ran up to put in new divergent high. Today, could put in another divergent high, but these divergences get sold into, or very likely will get sold into. So this one, maybe a little more upside to put in a new divergent high, but ultimately not too much more upside is, really looks likely. And then we should head lower. All right, NTR. This is one that looks like a long to me. Looks like a good buy the dip, basically at current levels. But you can see here, big downward price action here. All right, you have this big, downward move. Lots of reactions on that trend line. Built bullish divergence for a while. All right, that looks good. Breakout, back test, running. Today, pulling back to that former support, former resistance level, 57.20, and holding it. So maybe they dip down and hit the 200, but ultimately this looks like support to me. And it looks like we will then continue higher. Okay, so that one looks good for a long. And then if I go to like wheat, because this is kind of the same play, wheat pulling back a little bit today, but in general looks strong. Good strong momentum. Look at the momentum. It's just continuing. It's nice and strong, moving up. You've got good strong price action. Trend line, maybe I can mark it out. I think we've probably got some sort of an upper trend line like that. Okay, so maybe a little pullback here in wheat in the short term, but to me it looks like buy the dip. All right, buy it at support. There's no clue. The momentum's still there. The momentum looks strong, so looks like wheat is going to continue higher, and that NTR one should continue higher as well. Okay, that's all I have. Went through lots of different trade setups, talked about interest rates, gave you guys plenty of longs and shorts and things to watch for. So we'll go ahead and see what happens today, and I'll catch you guys on the next.